Let's talk about what's going on with your money today. With us this week is the co-founder and wealth advisor at VestGen Wealth Partners, Craig Bolanos. Craig, good morning. Let's talk first about these headlines today. Investors skeptical of a deal in Iran after seeing endless loops of whipsaw headlines, but oil prices down a bit, stock gauges around the world climbing. And what do you see for the rest of today, at least, Craig?
Well, no one knows. Just because the futures are pointing up, that certainly doesn't mean we're going to end in the green. But I think the bottom line is everybody knows they shouldn't be expecting an agreement. And yes, I do believe there's going to be an agreement with Iran to send the S&P up to 8,000. But the reality is there's such a dichotomy, such a divergence between sentiment and data. And as soon as we can get past some of the Iranian situations, people are going to focus on earnings. They're going to focus on data. And the data-driven market is very positive right now, Bob.
Although that University of Michigan Index of Consumer Sentiment was down, how important is that number?
Well, I want everybody in America to feel confident, but the reality is we've been through so many shocks for so many years now that this sentiment just continues to show all this negativity. And I've coined the phrase for some time now, the market climbs a wall of worry. And Bob, we've got plenty of bricks. They're not in short supply. So I think it's not going to change because of recency bias. Everyone remembers what prices were 3 to 5 years ago. That's not that long ago. And we're anchored to that. So even though the data, this year-over-year change of slowing inflation doesn't alter the fact that everybody knows prices are noticeably elevated from what they were a handful of years ago. And that gets into that data month after month.
We keep hearing that the fundamentals are okay and partially responsible for this market rally we're seeing. Do you agree?
I absolutely do. I mean, even if you take the S&P 500, Bob, we've had 473 companies report so far. That's 95% of the U.S. stock market index. And the majority, 87% of those companies, are beating their earnings on the top and bottom. And the few number of companies that have missed, they're not missing by much. So I think beneath the headlines of oil, Iran, inflation, all these issues, you've got a really good story. It's probably a secret that too many people don't know. We'll give it away. The U.S. economy is stronger than consensus believes. That's why it's able to defy logic for some. But if you're making data-driven decisions, this has made sense.
But we hear that even if the strait is opened tomorrow, it could be a long time, months and months and months at least, before things get back to normal as far as those prices at the pump. So what will that do to the overall economy if we're in that situation for a long time, even if there is a deal?
Well, I want to be really clear about something. First and most importantly, oil prices and yields on bonds, which is also very important. I'm not expecting them to drop to pre-war levels anytime soon, but I do think that there's a chance once you get a real definitive agreement with Iran that we could price oil back in the $80 per barrel range. And the market has never thought that this wasn't going to get resolved. If the market thought this wasn't going to get resolved, oil would have been trading up at 150 instead of 100. But your real point is there is a risk that the longer the inflation stays elevated, the more it starts creating this, this prophecy cycle. I mean, you go back to the University of Michigan Consumer Sentiment Survey that you said, people expect prices to be 5% higher, or they expect inflation to be 5% higher year over year. If that's the case, that psychology can actually start changing consumer behavior. That would be the negative. I don't think the prices in oil have been elevated long enough to create a long-term problem, but I do acknowledge if you can't get some relief past the 4th of July, then we should start getting more nervous than people are.
Yeah, that May number on consumer sentiment, the lowest it has ever been, and that was the May number. So what do you think the Fed policy will be going forward in light of all of this?
Well, I think we have to look that the FOMC, the Federal Open Market Committee, some of the minutes showed that some of the officials still preferred rate cuts if the Middle East can normalize. So I think you get that official agreement. I think that eases oil prices, eases yields on the 10-year Treasury, and it makes a rate cut once again possible later this year, which is good for growth because, Bob, everybody knows the Fed has a dual mandate: maintain stable prices, but maximize employment. And that's the part that the Fed's going to need to be looking at, because the employment situation in this country, the headline numbers aren't bad, but everybody knows it's fragile.
Absolutely. It's Craig Bolanos, and he is the co-founder and advisor at VestGen Wealth. For more, you can go to getretiredstayretired.com. Thank you, Craig. Have a good day.
Great to be with you.